Let's talk about consumption for a bit because we spoke about it earlier in the show. And I want to ask you from your perch, do you think consumption is on the mend? Because when I look at the last few quarters numbers of HUL, it seems like your results are strong, but they're
Yeah,
led more by price growth than volume growth. I mean, you're getting
that's right.
double digit price growth and
That,
probably mid single digit volume growth. At
that's
some
right.
point, do you see volume growth creeping back to nearly double digits? Is it
Yeah,
possible or
yeah,
likely in the foreseeable future?
yeah. First, it's an absolutely valid question. We always then say that we would like to have volume-led profitable growth. Yeah, volume-led implies that the consumers are consuming more of our products. Yeah. Now, this has been a very unprecedented and exceptional situation. One was, of course, the COVID, but more importantly, in the last 2 years has been the unprecedented inflation that we have seen. Normally, then, the inflation would be in one or two commodities, and that is something which we take it in our stride. And if I look at our history of the last 10 years, if we have grown in the vicinity of 19%, about 70% of our growth has come from volume, and the balance has come from price growth. And that's the right equation. Yeah. Now, this time around, the price growth is much higher. If you look at our net material inflation, yeah, if you take all our commodities and then you look at our net material inflation, in the June quarter it was 22%, and in the December quarter it came down to about 18%. So we are talking about this kind of commodity price increase completely unprecedented. I've not seen this kind of increase in the last 30 years that I've been working with Unilever. Now, we have taken price increases significantly lower than the NMI or the net material inflation. Our price increase has been in the vicinity of 11, 12%. Now, if I step back from HUL and look at the market from a value growth perspective on a moving annual total for 22 grew at about 6%, but the December quarter was at 8%. If I unpeel the onion and look at urban and rural, urban market grew at 8% on a MAT basis and 10% on a December quarter basis. Similarly, rural had a much muted growth. On a MAT basis, they grew at 3, and at a December quarter basis, they grew at 5. So about a 2% difference, which happened across the board. But if I look at volume, while the market grew at 6%, the volumes declined at minus 6. So the difference between minus 6 and 6 for the market, which is 12%, was the price growth. Yeah, within this, the urban market, they declined by minus 4, and the rural market declined by minus 9 on a full year basis. Now, during the December quarter, even the volumes declined less by 200 bips or 2%. So the minus 6 became minus 4. The minus 4 in urban became minus 2, and the minus 9 in rural became minus 7. So this augurs well that the December quarter for the market was better than the moving annual total for the full year. Having said that, we must realize then that December quarter also was a festive year. And there is always a base impact because you look at growth as a period on period or quarter on quarter basis. I think one would be able to come to a firm conclusion on how the markets are shaping up when we look at the March quarter and the June quarter numbers. But I believe that as the commodity prices, right now we are still at a phase where the rate of increase of commodity prices has declined. The rate of increase has declined, save and except palm oil, where the prices came down. We are not still at a state where the prices have started declining. Once they start declining, then there would be a correction of the prices by most companies. We would lead it. And I would believe that is the time when the volumes would start kicking back again. So there will be a period when the
Oh,
headline growth will decrease because the price growth will come down. But once the commodity prices start coming down, then the companies will start passing the benefit to the consumers, then they'll start consuming more and the volume will come back. That's how it will shape up in the next 12 to 24 months. But if you were to pause and ask me what's the consumption story mid to long term, very attractive. If India grows at 7 8%, our per capita consumption is just about $45. And when you compare this with Indonesia, which is 2x, China is 3x, Philippines is 4x, just look at the runway to grow. And within India, the rural consumption is one third that of urban India. So the runway to grow in rural India is even much higher. And there is no category in the country which has reached a stage of maturity. That's the reason I say why India remains such an attractive market. So volumes are bound to come back. It's only a question of time when they come back.
If you like the video, do like, comment, share and subscribe.